My kid is 10 years old. Should I consider investing in mutual funds for him, her? By the Money Coach team. To start with, a mutual fund is an investment scheme where money is pooled from different investors and invested in securities like stocks, treasury bills, money market instruments, and bonds, etc. In addition, the profit from this is shared amongst the investors annually or twice in a year or is modeled by the institution. Noteworthy, every parent thinks about the type of future they want for their children. We all want the best for our wards on all fronts financially, academically, morally, and in every other area of life. One of the commonest ways of securing a child's future is through financial investment. In addition, every good thing in the world today requires sacrifices. Anything. Name it: good education, good spouse, good life, all requires sacrifices. Just how far are you willing to make a financial sacrifice for your child's future? Way far, right? Although, kids below 18 years of age can't directly invest in mutual funds. However, they can, but through a custodial account created in their names. The account will be overseen by this custodian, who can either be a parent or a guardian. Furthermore, by the time the child has become of age 18 years old, he will have wielded the right power to personally handle the account. Investing in mutual funds can have a great impact on the future of kids. What really are the benefits of investing in mutual funds for your child? Although some parents consider investing in mutual funds as merely a way to multiply wealth, however, its benefits by far go beyond that. Investing in mutual funds for a child is a smart way to save for their future. 1. Thinking about their future. Firstly, investing in mutual funds is securing a future for your child. Owing to unexpected occurrences, a parent could become incapable of sponsoring their child's future ambitions. However, with a good mutual fund investment, you can be sure that you have a backup. A good future requires financial investments, and mutual funds are a great way to get started. When you actively involve your children in it, you are directly teaching them how to invest for a better future. 2. Cutting on expensive vacations, clothing. Furthermore, when you engage in mutual funds, you tend to cut out or at least reduce a lot of unnecessary expenses. A lot of parents go on expensive vacations and end up spending huge amounts on clothing. This is because they haven't thought about planning for their child's future. Noteworthy, going on vacations or buying clothes is not a bad idea, however, the future of your kids should come first. Vacations and clothing should only come after securing your child's future. 3. Making sure their education is well funded. Lastly, a good education takes time and money. Even if you are currently earning a huge amount, you can't be so sure it'd be like that forever. We have seen people lose their sources of income. Investing in mutual funds helps you make sure that while you are out of a job and considering getting another, your child's education remains guaranteed. The funds keep growing every year and, if properly planned, in addition, creates compound interest. And if you start early, it will just be sufficient for your child's education and even more. In conclusion, the importance of having a mutual fund set up for your child can never be overemphasized. It's of great benefit to you, the parent, and your child. Why not start one today and have a feel of what the future holds for you and your child? It's a wise decision.